Tremendous amount to process. It really remains to be seen whether earnings season itself is a catalyst here. It seems like some of the ones that are missing are getting punished a little more than the beaters are getting rewarded. That's a common theme. I think where we're sitting, though, here 6 months after the peak, January 26 was the high for this market. Thursday is half a year since then. It's a prolonged reset process that I think we've been going through. Most corrections have fully recovered by now, so I think you have to at least ask the question, what's really wrong as an overlay? Maybe really all that was wrong was the starting point. I'll be honest with you. We're up 4.8% in the S&P 500 year to date coming into today. You're on track for about a 10% annualized return, including dividends. The PE multiple of the market is back to about the 5-year average. You'd kind of look at that picture and say, well, this is a decent year. On the other hand, we were above this level just 6 months ago, and look at what it took to get us here. 20% earnings growth, repatriation of hundreds of billions of dollars in cash, record levels of buyback. So I think that's why you have this push-pull in the market. I think the edge still remains slightly with the idea that this is a bull market that's in this kind of recalibration phase right now.
The negative comments we're getting out of calls, or at least the negative guides today, it's ITW on currency and margins on costs, right? Should that be a surprise? As much of a surprise as earnings are?
I don't think it should be a surprise at all. I do think that's the threat down the road. Of course, you know, some areas wages are actually doing that job as well of compressing margins. But the starting point for industrial valuations at the beginning of this year is really the problem, right? I mean, so it shouldn't have been a surprise. It's just they got really expensive, right? You looked at the Boeings and the ITWs, and they just had to adjust to this new world given where valuations started out.
What do investors writ large need to hear from these big mega cap tech companies this earnings season? Because normally we're looking at those as perhaps bellwethers for tech, but right now they're just a huge part of the story for market momentum overall.
Tremendous part of the overall market. Honestly, you have to have the sort of multi-year story remain intact, right? Because I think the whole point, the reason they're here, the reason they're able to lead the market is people say, I don't have to worry about materials costs. I don't have to worry really about end demand because they're kind of these magical growth machines. That pretty much has to be, I think, affirmed. And the stocks have flattened out a little bit. So I think you have to wonder if the market is starting to think that maybe they have to kind of come back to the pack a bit.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.